Good morning and welcome to those who were not in the previous session. We are about to start the session on access and transparency of credit. We have 4 speakers who have, most of them are intermediaries, and we have Arnaud who represents Baobab, which is a direct lender. So, without further ado, I will ask the speakers to introduce their business in a few words. Starting with you, Arnaud, you operate in Africa and China.
We operate in Africa and China, where we run about 10 banks specialized on the micro and SME lending. We've lent last year about 1 billion euro to about 1 million clients. Half of those loans were digital, and the rest through branch. I want
to pause on that because it's 1 billion euros to 1 million clients. It's not, you don't hear that every day, you know. So we have to let it sink in, you know. Microcredit is big business now. Sorry for the interruption.
That's it. That was the introduction.
But you also told me that you're doing some SME lending. It's not only microcredit, it's also...
Yeah, we lend anything from a few hundred euros to 200,000, 300,000 euros. So 40% of our clients are SMEs. Most of our clients are anyway in the informal sectors. Very few of our clients will go to a bank. And as I said, 40% are SME, the rest are micro entrepreneurs.
And they access your services via
So as I said,
phone.
50% of the loans are fully digital. So basically the marketing would be mostly through SMS campaigns or online. And the loans would be disbursed on their wallet or digitally. But 50% of the loans are provided through branch. We have about 250 branches in Africa.
So it's branches and mobile phones.
Exactly.
Mm. Stefan.
Thank you very much, Therese. Good morning, everyone. Loanboox is a platform that connects the public sector borrower with the institutional investor. We founded the company in 2015, went live in 2016, and we're just about to crack the 20 billion financing volume on the platform. We are active in 4 countries as of today. We started in Switzerland, we went to Germany, Austria, and just opened the office in France last year. And we're now expanding from only public sector also to private, very large multinational companies. The borrowers and lenders meet on the platform, and within a few minutes they can transact. And you can imagine the ticket sizes are large. It's usually on average about 20 million, but we've also had several 100 million volume in one transaction.
So a huge difference. What about you, Stefan?
Yeah, I'm also Stefan with PH. I'm the founder and CEO of FinCompare, and we help SMEs to find, compare, and close financing solutions. Our target SME is normally around 1 million to 15 million in revenue, and our average lending volume is around 200, 250K. So slightly below more the enterprise customer that Loanboox is targeting. And we are so far active in Germany, which is a massive market for this kind of business. It's 100 billion annual lending volume that we are after. And so it's a very big opportunity there. We are bundling over 275 banks now and alternative lenders on our platform. And these are large banks like Commerzbank, Deutsche Bank, but also Fintechs like Billy, factoring startup or funding circle, as well as alternative lenders in the leasing space or factoring space.
Thank you. Konrad.
Hi, I'm Konrad. I'm the Chief Executive of Funding Options. So we play a similar role in the market to FinCompare in our home market of the UK. So we help small businesses to find alternative lenders. We have more than 50 active lenders lending to our customers in a given year. Our average customer is a bit smaller, actually. So our typical loan size is around 50,000 euros. Our typical customer, I would call, is an established micro business, which we think is a particularly underserved area of the market. But we do help customers all the way from tiny loans below 1,000 euros all the way up to many millions. But we see our sweet spot as being established small businesses.
And can we have an idea of the traffic that you're getting at your site?
Yeah, so we currently facilitate approaching 200 million euros a year of lending to small businesses. We fund thousands of small businesses every year. So the way I think about the world is we are replacing traditional brokers. So there are traditional brokers, thousands of traditional brokers in the UK. They're the equivalent of high street travel agents 10 or 20 years ago. They collectively facilitate around 10 or 20 billion pounds a year of lending in the UK. We're a fintech, next generation online version of that, and we see our role as replacing that aging model of traditional brokers. So our aspiration is to grow from that 200 million euros per annum to billions.
That's extremely interesting because I remember I was living in the Netherlands 10 years ago, and the 10 years before had been the time where the mortgage business switched entirely from 80% banks, 20% brokerage, to 80% brokers, 20% banks. And now you're telling us that it's going to be 80% online brokerage, and that the entire brokerage industry is going to disappear.
Yeah, well, I think the challenge is certainly looking at the UK market, the traditional broker population. Firstly, it is aging. There is a demographic issue, which is that the typical age of a traditional broker is, they're coming towards the end of their careers. Also, a lot of what we do in the UK is regulated. So many territories in Europe, commercial lending is unregulated, but there are areas of our market that are regulated. And the regulator is taking this segment increasingly seriously. We've had a string of scandals about lending to small businesses, where small businesses have lost their homes and bank mis-selling scandals. So the regulatory bar is increasingly growing. And of course, small businesses themselves have growing expectations. What we see all the time is that the expectations that we develop as consumers around the ease and speed that we get with our online services, they're beginning to expect that from in their SME financial services. So generally, we just see a relentless trend, actually, of replacing that traditional broker population. But actually, the biggest driver above all else is simple demographics. That population is not being replaced.
We also see that it's not just the brokers we are replacing, the offline guys that we have in Germany too, but it's also kind of the traditional retail house bank in that sense, yeah? Because there are so many financing options available to SMEs today that a traditional house bank cannot provide and doesn't have access to. And so these banks all are struggling. They're moving more to real corporate clients, like where they do like 100 million revenue plus, yeah. But these like small SMEs, like either the really small micro entrepreneurs or the ones we are after, the small Mittelstand in Germany, they're all really underserved by the house bank, where there's no industry expertise and there's no real access to all the options that are actually available in the market. And so we see a lot of repeat business actually on our platform, where the customers come back to us because of the service we provide.
So even when they have found already one solution, they're not content with sticking to that solution. They will come back to you to look at more options.
Correct, and that's very different to, for example, the mortgage market in the private consumer space, where an individual may buy a house once or twice in their lifetime. Yeah, in an SME scenario, you have financing need 4 or 5 times per year, and if you become the primary choice for that business to go to when they have a demand, and they trust you with their data and they trust you with access to their bank accounts, for example, or accounting data, then you can really build very cool companies on top of that.
Talking about Loanboox, we have had in France quite a few scandals with banks lending to municipalities in loans that were indexed on the Swiss francs and ruined these municipalities. So I think you're coming to France is really welcome.
Thank you very much.
Apart from that, what are these institutions looking for at Loanboox? How do you really improve their access to finance?
It's a very good question. Before I started the company, I asked potential clients what they think about how the market works. I asked borrowers what they think about how they raise money, if they like it or what's the problem with it. And I also asked institutional investors what the problems are in the market. And they both said pretty much the same thing. They said it's extremely intransparent, it is very expensive, it's tedious, a lot of work, not innovative at all, and it's not secure. And with that feedback in a market that is very standardized, actually, it's absolutely clear it needs to be on a platform. And so this is also today when we get customer feedback, this is what they like the most. They say it's so easy. You have to understand, before, when a city, for example, needed to build a school and needed to raise 25 million euros in order to build the school, they wanted to raise that money for 20 years. They wrote an investment memorandum. They sent it out to banks. The banks came and met with them. They had discussions, got to know each other. They sent back and forth documents, but the documents were too large for email, so they printed them out. They sent them by mail. Then at some point there were indicative offers being provided, but you know, the guy at the municipality or the city doesn't do that every day. So it was difficult for them to really understand all the details. It was difficult for them to understand real interest rates. And there are all these fees associated with it. And then later, they chose maybe 2 or 3 on the short list, and they got lending contracts that were 40, 50, 100 pages long with words on it they didn't really understand. So the whole process easily took months. 4 months, 5 months, sometimes 6 months. And the whole thing on Loanboox now takes a minute or 2 to put in a financing request, and then another minute to close the transaction. And it's fully digital. And you can see all the information absolutely comparable on one page. So that's what the clients love the most, how easy it has become. And by the way, we also reduce facilitating cost by 90%. So that's obviously also something they like a lot.
And so when you onboard these customers, how long a process is it when you onboard these municipalities?
Well, let me answer that in twofold. The onboarding process is actually very quick. If a client registers on the platform, there is a check. We send out a letter. Unfortunately, we have to do that still offline. And once we get it back with copies of IDs and so on, they're fully onboarded. So that takes maybe a day or 2. But before that, there's obviously a customer acquisition process. And that is not that quick because, as you can imagine, the public sector really, also because of the scandals and the mistakes that happened in the past, they're very careful today. They evaluate very carefully. They make sure everything is okay. They check that. You maybe sometimes have to go 2 or 3 times, show them the platform, how it works, get references from other customers. So that process takes a long time.
In terms of customer acquisition, you told me, Arno, that Baobab, within the few years, you will remind us how many years you have operated, has become a well-known finance provider. And you also mentioned that your customers are return customers and that they are very smart customers. Can you elaborate on these 2 points?
So yes, we have been operating. I mean, we started investing about 10 years ago in the first markets in Africa, where we invested Senegal, Madagascar, and Côte d'Ivoire. So in those countries, we have become the leading player in the micro and SME sector. So we are obviously very well known and visible also because we have physical presence. Take a country like Senegal, we have 50 branches across the countries. We have 800 staff. So people see us, especially as our staff go in the market. We do street marketing all day long. So people see us and they know us. And after, as I said, 10 years in those markets.
Do they have a special jacket? Or
they have a special shirt.
A special shirt.
A pink Baobab shirt.
Okay.
So it's very visible. So people know us, and that's how we get a lot of our clients. And increasingly in the last 2 or 3 years, obviously we are dealing mostly in Africa, where digital is a bit slower to come than it was in Europe. But in the last 2 or 3 years, increasingly digital marketing and our digital presence makes a lot of clients come to us. So I guess that's just on the first point. The second point about the sophistication of our clients, we are dealing mostly with, as I said, micro and small enterprise. However, as I mentioned to you earlier, I personally believe that those clients, because they have very little access to financing options, because money is very important to them, they know how to count very well, and they are, in my view, very sophisticated. So obviously, we provide a lot of not training, but transparency on our product, and we explain them what they go into it. But they are very aware and clever about why they need a loan and what they will do with it, and how they will make more money thanks to it.
In those countries, these people have extremely little, they have no working capital. So they just hop from one sale to the next.
Yeah, that was one of our points. 70% of, depending on the countries, but let's say it's between 60 and 70% of our clients are repeat clients. And indeed, they use our funds mostly for working capital to finance their business. Out of this 70% of the clients, most of them grow with us. So they increase their loan size year on year. And obviously, their business develop together with us.
And can you already see an economic influence of this microcredit? You say this business grow with you. Do you see them maturing to a different level where they could borrow at a lower rate because it would be more like, more long-term loans, or they could invest? Or
so you don't have only success stories, but most of them obviously grow with us. However, we are not talking. I mean, one should stop thinking that this is transformational enough to take a very small business and transform it into Microsoft in a few years. So most of those clients stay with us. Many of them have stayed with us for 10 years. Many of them, I knew them 10 years ago. They have grown since then, but they are still small or tiny micro business in remote places in Africa. So they are growing. The income, family income, etc., is improving, but this is not drastic. Some of them are growing very, one of the last businessmen I was meeting in Côte d'Ivoire a few months ago was making enough money through his business to start investing in real estate, and he was buying buildings in Abidjan thanks to the money he had made with us, and he started with us borrowing 2,000 euro. 5 years later, he was borrowing 70,000 euro. So some of them are growing significantly, but most of them are growing, slowly year on year.
It's a long-term.
It's a long-term process.
It's a long-term process. We've talked about access. Let's talk about transparency. How do you really feel that you're increasing transparency and enabling your customers to have better credit conditions? So can you explain whether you really improve transparency, and how do you do that?
Well, in terms of transparency, I mean, expectations need to be realistic in the SME segment. It is a very complex segment, and there is no perfect transparency, perhaps, in the way that you can deliver in the consumer segment these days. We see ourselves on a journey of bringing greater and greater transparency. So, I mean, just to bring that to life, the main use case for small businesses coming to us for finance is working capital. So in the UK, more than half of all finance needs are driven by working capital and cash flow. It is actually very, very hard to give an accurate comparison between factoring or receivables finance as one product versus an unsecured loan. You can get close to it, but it's very hard to do. So, I'm not going to use this forum to pretend that transparency is perfect. But what we do is being much greater levels of basically access to an alternative products to the market. So our typical customer doesn't know the SME finance products in the market. We don't ask them what product you're looking for. They need cash, and our job is to find something within their business, whether it's the physical security or it's their cash flow characteristics, their invoices. What is it that can release that finance for businesses? We're very good at that because we use the internet. Like travel sites have brought extraordinary levels of diversity of provision compared to a traditional high street travel agent. We do the same with the internet, and we have a growing ability to actually deliver transparency in terms of pricing and terms. But for us, it's an ongoing journey. We are taking a market online, and to give a sort of a real example from the travel industry. There's a company called lastminute.com which revolutionized searching for travel online in the UK. And I met one of the founders of that company, and they told me in the early days of lastminute.com, they had an amazing internet front end, an amazing website, and at the back they had 20 fax machines because the travel industry was still working on fax machines, yeah? So, you know, you have to take the industry with you. But we're certainly bringing more transparency, but above all else, we're bringing a lot more choice. Because we've moved from a world where small businesses were massively over-reliant on their banks, something that banks are very uncomfortable with because they don't particularly like lending to small businesses, to one where it's much easier, faster, and more transparent to access alternative lending. And we see ourselves on a journey of trying to revolutionize that market.
I can only share this, right? For us, it's about transparency on which products are even available, right? So it's very, very basic, right? You first need to explain to these businesses that there are options outside of a standard bank loan to them available, and then what is the process behind this, right? What documents you need to provide, etc. That even inside a bank, when you go to a normal bank even, the guy in the retail bank can't really tell you what documents he needs, right? He can tell you maybe a standard set, and then there's kind of a back and forth between him and the risk guys in the background to give you more document requirements. And you as a business, you kind of go absolutely crazy because you have no transparency on that process, and that's what really drives people crazy today. It's not just about this consumer front end where you say, okay, it's all prices and I can compare factoring against a loan against leasing. It's not like apples and pears, right? It's really about the process behind it that you first need to digitize and there create the transparency.
Yeah, just to sort of double down on that, you know, the bar is set really low in small business finance, yeah. Simply the ability to get a straight no from a bank is not a hygiene factor, yeah. You get this drip feed of document requests. You know, you're often wondering if as a small business whether the bank just wants you to go away and they don't want to say no. The bar is set low. Yeah, transparency is simply giving someone a straight answer, and you know, we've definitely brought that to the market. We now see ourselves as taking further and further along that route.
Thank you, thank you. That's very genuine. What about you, Stefan?
Yeah, for us, obviously, transparency is extremely important because that was one of the issues that our potential clients said is a big problem in the market as it works before digitization. So for us, it starts with the borrower. When they onboard onto the platform, they have to provide certain information. It's standardized in every country for every client segment. And these are like some key financial numbers, some annual reports and so on, such that the lender has all the information they need to make an assessment of the borrower the moment they look at the financing request. And we have actually never had any questions afterwards, so everything is provided. Then the next step is obviously the comparison of the offers of the lending contracts, because we don't have a standardized lending contract on the platform that everybody needs to use. But the lenders are able to provide their own lending contracts, sometimes even several, depending on the financing. And those are fully digitized in Loanboox. And then, as I said before, on one page, the borrower can compare terms of the contracts as well as real interest rates, which show all-in costs. And there is no way of adding any costs to the process. So the clients have to provide all the information about themselves, and every step of the process is transparent, all the fees are transparent, and I think that can always be improved, but I think we've really moved that segment of the market a very far step forward into transparency.
And what is really interesting, you told me, is that this summary sheet, so to speak, it will stay there forever. You know, so the two parties will always be able to go back to that summary sheet.
It goes a little bit back to your point before, Therese, when you said there were some scandals with public financing in the past. Today, when they do the whole process on Loanboox, it will always remain on there. So an audit has always the chance to go 20 years back and look at what happened exactly, who was making an offer, did they really accept the cheapest offer or not? If they didn't accept the cheapest offer, they may ask questions, why not? And that will always remain on the platform.
Thank you. What about your customers? You know, do they have a lot of information? Is there enough transparency in the market?
I was very interested to listen to, even if it's very different context, in a way there are a lot of similarity. And one of the big similarities, I think, if we succeed, where we succeed, and basically in the last 10 years, we have grown for about 40-50% a year average. So if we succeed where we succeed is, in my view, for two reasons. Exactly those topics, access and transparency. We provide access to clients which traditionally don't have access, or they have access in opaque context. They go to banks, and it's exactly what you mentioned. The process is impossible to understand. It's not transparent. It's very complex. In Africa, not only you have to go through a very complex process with documents, etc., but you very often have to bribe your loan officer, or have to, invite him for lunch, which is another way of bribing. So the process is just unacceptable for those SMEs and micro. While they come to us, the process is very clear. It takes 2 days, up to 5 days for the most complex loans we have to deal with. It can take a few minutes when it's on digital. And I think that's one of the key success factors. And by the way, because we operate where we operate, and because this sector is in a way quite supervised and regulated, etc., there are a number of standards that we adhere to on transparency. And in fact, there is a big standard in micro and SME finance in an emerging market called the SPTF, Social Performance and Transparency Framework, through which you adhere and commit to share with the clients a number of informations, respect a number of social performance criteria, etc. So, but I believe, for me, this is one of the key success factors, is in a way respecting enough the clients to be transparent enough, and that's precisely what they don't get in the most traditional banks in Africa or in emerging markets.
And talking about technology, you have the branches and you have the mobile. Are all the processes online? Are they historically archived in?
So historically, no. Obviously, when we started 10 years ago, technology was not at the level it is today, and there was no way to digitalize the process as much as we do today. However, we've changed that a lot. In fact, 2 years ago, I put the company toward a digital footprint and decided to start accelerating the digitalization. Hence, the 50% of the clients which are now processing only through digital channels, many through mobiles, or as well the processing which is itself being digitalized step by step, so that it's even faster and more transparent. But that was not the historic basis, so this is progressively converging towards that.
Do we have a question from the audience? So I think it's a bit startling because we have so many different businesses. So now I will leave you the final words. Where do you see yourself? We were saying in the session before that we might be at the tipping point of FinTech. Can you comment on that? Where do you see your companies in 5 years? Where is this going? Conrad, I will start with you.
Well, I think my comment would be in the area of SME finance, and this is a global comment. I think the global financial crisis, because it was so big and so traumatic, actually hit a much more important trend. Because you get your credit cycles, but there's a much bigger secular ongoing trend, and it's relentless, which is that there is this fundamental tension that banks are finding it increasingly hard to serve SME customers. So their traditional relationship management model, the economics simply don't work. There's really no point us beating up the banks about not having branch relationship managers. It doesn't work.
If I may add to that, many of the speakers commented that large banks are tending to go upscale rather than going downscale. Is that also your observation?
Yeah, absolutely. In the UK, when I started the business, if you had certainly 2 million euros of turnover, you definitely had a relationship manager out there, probably in your town. These days, during that time, it's moved from having a named person in a call center, and now you just have a call center where you can speak to anybody. So this trend is ongoing and relentless. And on the other side, the latest capital regulations that came as a result of the global financial crisis don't make it attractive from a capital perspective to lend to the SMEs, particularly overdrafts and working capital. So I think that there is this ongoing relentless gap, and I think that's why I feel happy about the market that we're in. That's not going to go away. We'll have credit booms, and we're definitely in a credit boom now. We'll have credit downturns, but fundamentally, something has to replace that traditional relationship manager model, because small businesses around the world will no longer have an expert they can speak to that will say, well, okay, you're the 1 in 10 customers of my customer that's perfect for receivables finance or for a commercial mortgage. So something has to replace that, and we see ourselves as riding that wave. From a technology perspective, the great enabling technology for us we see is open banking. Open banking really levels the playing field. So alternative lenders, despite what we love to say at these conferences, are often less data-driven than banks because they don't have access to that data. Well, we now are leveling the playing field, and these very technologically driven lenders are going to start using that data and doing better lending than the banks have achieved with the same set of data. So from a technical perspective, particularly here in Europe, in the UK, we are already live in the UK at Funding Options using open banking. We're very excited about it. We see it as a 5-year journey, but it will be transformational for our world.
Thank you. Marcus?
No worries. I want to add to that, right? For me, I think it's really what Konrad said is important, right? One is this relationship that is super important still for the SME, that they have a person to talk to. And I would summarize this also as a user experience in that sense, yeah, that every business owner by now has an iPhone, is used to like consumer internet and really great customer experience. And if you look at normal online banking for SMEs, especially in Germany, it's still horrible. Yeah? And just to change that user experience with a personal touch point, I think is a massive change that will happen over the next 5 years to move that process into an online user experience, not necessarily automating it completely. I don't think we are fully there yet, for especially like the little bit larger tickets that we are doing. It still will be a human-driven process at the end of the day, but you can create a custom experience around it that will be highly scalable and really nice for the consumer at the end of the day, in our case, a small business. Open banking, again, PSD2, I think is a massive game changer. In the B2B segment, you could get access to banking data before through eBICs and other kind of access points, but really the PSD2 trend is creating massive interesting lenders that will again use this data to provide a better loan product for the SME, but they all have a distribution problem because they don't have retail locations, they don't have existing customers, and if they are very focused, very niche with their products, then to run a big marketing game is very expensive to them. So that's why I believe in these like one-stop shop platforms that Funding Options or we are building to really kind of build this distribution layer for specialized financing providers and to deliver a great customer experience for the user at the end of the day.
Thank you.
Yeah, I don't want to repeat everything that was said, and I agree with everything that was said so far. I can add to that I believe it's a logical thing that that's going to happen. It's a logical thing that technology will solve that in the future. When I ask, oftentimes banks feel like threatened by us. And I asked them, how do you think that business is going to be done in 5 or 10 years' time? And nobody says there's going to be a person or a human broker being an intermediary anymore between those parties. Everybody knows it's going to be technology that will manage the entire process, make it cheaper, make it more transparent, and make it easier. And so I think for us, it sometimes just means we just have to grind on. It's not always easy in every market to convince people that this should be done today, right? They try to fight it or they fear it, and especially banks do. And so what we're trying to do is we're trying to take banks on board. About a third of our lenders are banks today. And we're trying to work with them. We try to cooperate with them. Some of them then pretend to be super interested, learn everything, and build their own platform, which I think is not the right way to do, but we'll see. I think in our space, there will probably be 1 or 2, maybe 3 global platforms taking care of the market, and we hope, obviously, to be one of them.
Thank you. It sounds very challenging. Arnaud?
So in our markets, which are emerging markets, it's obviously a little different. But one very interesting point in my perspective is, as I mentioned, or as you mentioned, we operate in China and Africa. And I was able to. We started in China about 10 years ago, where everything was beginning in terms of technology, and I was able to see this, the difference, especially in the financial sector, the impact of technology, the platforms, the Alibaba, WeChat, etc., on access to finance and transparency, which obviously has been huge, mainly because there was no, especially if you take the traditional banking sector in China, the banks are even more backward than whatever you have in Europe. So there was nothing in that sense that allowed basically to move very quickly from nothing to something which is more exciting than anything we can see in Europe or in the US in terms of digital finance. And so the way I see it in Africa or in emerging markets generally is because we start from very, very low. Technology has basically an even greater impact than what we see in Europe or in the US. Obviously, everyone knows in Africa that the example of mobile phone and fixed line phone was demonstrated that over the last 10 years. So in my view, the impact of technology on finance in those markets has even a greater future than it has here.
Leapfrogging
Exactly.
quite many developments. Thank you so much. Indeed, Arnaud has incredible stories to tell about China and importing his Chinese experience into Africa. Thank you very much to all of you for a very interesting panel, and thank you for attending this panel.